The moving average convergence divergence, or MACD, is a variant of the exponential moving average, EMA, that's commonly used by traders and can help to evaluate the underlying momentum in a trend. The MACD has three elements. 1. The fast EMA, normally a 12-day EMA. 2. The slow EMA, normally a 26-day EMA. 3. The zero line. It's shown in a chart below the price chart, making it an oscillator. It also displays a histogram, which represents the difference between the MACD and its signal line, which is the 9-period moving average of the MACD itself. The MACD can be used on any time frame, from 1-minute charts all the way up to the monthly. The MACD is best used as part of a trading strategy that includes multiple elements. It can be useful in a number of ways, and we'll be covering those in our next video. Please like or subscribe to our YouTube channel for more trading education content.